Let's continue with our journey. We were learning how to record journal entries. Now, what are journal entries? Journal entries are nothing but recording of the transactions, recording of the business transactions in a book called as the journal. So, what are we doing? We are recording the transactions of the business transactions in a book called as the journal. When we make an entry in the journal, it becomes a journal entry. In our last video and the previous video, we started learning few journal entries, few different types of transactions, how they are recorded in the journal. We'll continue with that. But before we continue, we'll revise the golden rules of accounting, golden rules for recording of the journal entries. We said there are three types of accounts. Real accounts, the rules are debit, what comes in, credit, what goes out. I'm just writing a short form here. Then we said there are some accounts called as the personal accounts. The rules are debit, the receiver from the business, credit, the giver to the business. Then we have the nominal accounts. The nominal account rules are debit all expenses and losses, credit all incomes and gains. So these are the rules which we are using for recording the transactions in a book called as the journal. If you remember, we were discussing few transactions. We'll continue with that. The business was Pineapple Mobiles Private Limited, engaged in the business of manufacturing and selling of mobile phones. We purchased land. The owner invested money in the business. We purchased land. We constructed a factory. We deposited some money in the bank. We installed the equipment. Now, what will we do now? We will start purchasing some raw material. Let us say purchased stock of raw material, purchased for cash, rupees 1 crore. What are we doing? We are purchasing some raw material. We have purchased some stock of raw material. What can be the stock of raw material? It can be motherboards, it can be chips, it can be other small parts which go into making a cell phone. Okay. Now, how do you record this journal entry? If you see, we are purchasing some stock of raw material for cash. So I can straight away write cash to cash account rupees 1 crore. I am crediting cash. I'll tell you the logic why. Then we are purchasing stock. So stock is an asset. Raw material is an asset. It has some value. When we sell it, we are going to get some money. So it's an asset for us. But instead of using the term stock of raw material, I use the term purchases. So what am I purchasing? I am purchasing stock. Stock of what? Stock of raw material. Purchase account debit rupees 1 crore. I see to it that there is a distinction between the debit item and the credit item. Okay. Now, what is the logic I have followed? The logic I have followed is stock. Within brackets, I can say purchases. I use the terms interchangeably. Real account, it's an asset for us. Debit, what comes in. Okay. Then cash, as you all know, it is real account. Credit, what goes out. So this is the journal entry we record. Okay. Now let us take up one more journal entry. So what is this journal entry actually telling us? This journal entry is telling us that please go to a paper in the ledger called as the purchases account. It has two sides, debit and credit. On the debit side, write 1 crore rupees. We have spent cash to purchase stock. And it is saying go to the cash account in the ledger. It would already have some entries on the debit side and the credit side. In that same account, write 1 crore rupees on the credit side because we have spent some money for purchasing raw material. So this is what this journal entry is actually telling us to do. Okay, we will learn in detail how to prepare ledger accounts from journal entries in a separate lecture in the future, but this is only for the sake of understanding what journal entries are all about. Okay, now let us continue. Now I continue to purchase some more stock of raw material. Now this time maybe I'm purchasing screens, other small parts, etc. Stock of raw material now purchased and issued a check because we have deposited some money in the bank. We have money also in the bank. We have purchased some more raw material and we have issued a check of rupees 50 lakhs. So how do I record this in the journal, in the book of first entry? Journal is also called as the book of first entry. So how do I record this transaction? Again, I'm purchasing stock. Instead of using the term stock, I use the term purchases. Again, I have purchased some stock of raw material. Purchase account debit rupees 50 lakhs. 2. Now I'm not paying cash. The bank is going to pay money to the vendor. The bank is giving money on our behalf. The bank is a giver. Now what is the logic behind the entry? Purchases. I treat it as a real account. It is coming into the business, hence debit. Stock is an asset. I just use the term purchases here. Then bank, personal account. It is giver, credit. When we deposited money in the bank, we treated the bank as the receiver. Now when the bank is giving, when we issue a check, what happens is this money is going to go out of my bank account and it is going to go to the vendor. So bank is giving money on my behalf to the vendor. Hence bank has to be treated as the giver. Okay. Now what will be the impact of this journal entry on the bank account? If you see a bank account, when I have deposited money in the bank, 5 crores would have been debited here. I used about say some amount. When I have purchased some equipment, I have credited the account. Because of this journal entry, bank account is in the credit. If this is debit, this is credit. So I am going to record this on the credit side. What will happen is my bank balance, if I find the difference between the debits and the credits, I'll know my bank balance. The bank balance is going to reduce. Okay, let's continue with some more journal entries. Again, stock of raw material purchased on credit from Fixcon. So I'm purchasing some more raw material. Now the raw material is purchased on credit and I have promised to make the payment after 3 months. They have agreed to give us a credit period of 3 months, rupees 1 crore 50 lakhs. So I've purchased some more stock, but this time I'm not paying cash or neither I've issued a check. I'm going to make the payment after 3 months. The vendor has agreed, Fixcon. Now how do I record this entry? Again, I'll use the term purchases here. Stock account debit 1 crore 50 lakhs. 2. The vendor Fixcon account credit 1 crore 50 lakhs. Now what is the logic behind the journal entry? I'll write the logic quickly here. Purchases, stock, it is real account, comes into the business, hence has been debited. There is nothing new in this. Now I write the name of the party here, Fixcon. Now Fixcon is a personal account. Fixcon is a person who has given us raw material. We owe money to him. we have to remember him as a giver. If you remember when I told you the rules, we said a person who owes money to the business, his account should be debited. And when the business owes money to a person, that person's account should be credited. We are going to remember Fixcon as a person who has given money to the business, giver to the business. And we have to remember that we owe money to him. So we remember him as a giver so that in the future, when he demands money, we are going to give the money. We cannot forget. That is why we are recording him as the giver in the books of accounts. Okay. So if you observe the three transactions, when we purchase for cash, purchase is debited, cash is credited. When we purchase and we issue a check, purchase is debited and bank account is credited. When we purchase on credit from the vendor, purchase account is debited and the vendor's account is credited. So this is how we record the entries relating to purchase of stock of raw material. Let us continue and learn few more transactions. Now, this raw material is converted into finished goods by the workers, and when the workers work, we have to pay them some wages. Wages paid in cash to workers. Rupees, say 20 lakhs. These are only illustrations to understand how to record the journal entries and to learn the concept of recording of journal entries. Now, I'll identify the easier part. To cash account 20 lakhs. I'm crediting cash 20 lakhs because very easy, cash real account going out credit. Now I'm paying cash for an expenditure called as wages, hence wages account should be debited. Now question arises, should I not remember the workers in the books of account? Should I not write the name of the worker who is receiving the money? No, the answer is no, because the workers don't owe the money back to the business. They have worked hard, they have already provided services. So, whatever wages we are going to pay to them, they are not going to give it back to us. That is why we are not going to remember the workers in our books of accounts. We are not going to write their names here, and we are not going to treat them as people who owe money to the business. So, cash is going out for an expenditure called as wages. So, the logic here is wages, it is nominal account, debit all expenses. This is an expense for the business. Next, cash, it is real account, it goes out, hence credit. So this is the logic for recording this journal entry. Cash has gone out for an expenditure called as wages. That is why this is debited and this is credited. We'll keep our video short and we'll meet in next video and we'll continue learning our journal entries.